Hey, it's Glacier, and this will be a video chart on HESG, Health Sciences Group Incorporated. This was the monster chart last week and has since really started to pull back. And in fact, yesterday closed below what I call the must hold line, which was a red flag in my book. Today, though, I put in a nice green candle. And the other thing to note was you got a nice bounce off the 20-day simple moving average, which is this maroonish line right there. So possible bottom here, and with all the requests and so forth that I got, I just want to kind of go over what you want to see with kind of sideways action, and then what you want to see with any sort of bounce. I mean, I've seen some people say, "Oh, we're starting to bounce," and you can't say that after just one candle has formed. Sure, if you get a few more, you could say that a bounce is in action, but just because you got one candle, that doesn't mean that the chart's bouncing or is going to bounce. Confirmation is always required in the world of technical analysis. So that's going to be the main focus of the video, is just kind of what that confirmation would be and so forth. There's a process, and if you watch my other videos, you've heard me say this, but all stocks need to go through kind of a little circle of life, if you want to call it that. First, they need to, consolidate or just stop bleeding, whatever you want to say. They need to consolidate and heal themselves. Then they need to be able to start to bounce, and then a bounce turns into a reversal, and then a reversal will turn into a breakout. So some stocks, sure, they'll go into one candle and then all of a sudden bounce in reverse all in the same day, but that's definitely the exception and not the rule. So the first thing and goal number one for this chart is we just want to see the first step take place. We want to see some sort of consolidation or leveling out. If that means getting some more sideways days, then you know what, that's much better than still having the chart go down. And if it does start to go sideways, then that would be kind of step number one in terms of the process that needs to happen. Now, in terms of confirmation, I guess the question is more of where does the price need to close above before it could really be considered a bounce. And of course, this is just all my opinion with things. But in order for me to really consider this a bounce, and I'm just going to delete these lines now since I'm kind of taking a different approach. Going to leave this one on here since this is that key support level. Um, but in order to really consider this a bounce, I would personally want to see it be able to get up above here. And when I say get up above, meaning get a couple closes above this level. Um, and that's where, so if you get a couple candles that close up here, that's where I would feel comfortable saying, okay, the chart is in bounce mode now. And remember, bounce is not the same as reverse. There's always, fake bounces, dead cat bounces, head fakes, whatever you want to call them. Bounces don't automatically turn into a reversal. But in order for me to say that this isn't a bounce, I would want to see some closes above here. Because what I could see happening, and keep in mind this isn't a bad thing, but I could see the price coming up here, getting knocked back down, coming back to the 20-day moving average, bouncing back up, hitting there. Now this would still be going sideways. This would still be consolidation. Yes, it would be in a wider range, but the price action would be the same. It just would be going back and forth between that area. So that's why I would want to see a couple closes above that area just to make sure that we're not just going to start consolidating back and forth right there. Now, in terms of where would it be for a reverse, before I would consider this chart reversing from this pullback here, that would be right up here. So I'll just change this to another color. And the reason I would select this as a reversal level is because after that the next resistance isn't up until here, which is the breakout point. So that would kind of be the circle of life. It would stabilize, bounce, reverse, and then hopefully get up there and get the breakout. But that's maybe getting too far ahead of ourselves. But for right now, to answer all the questions, this is where I would call it the bounce line, meaning get some closes above there. That's where I would personally consider it a bounce. And then to be able to start to consider it a reversal, I would want to see it get up above this line here, which is priced at 0.0017, and the bounce line is at 0.0013. So that's where the chart stands. The one good thing about this pullback here is it has been occurring on decreasing volume. That would be really bad if this was occurring on increasing volume, but volume has been going down. So from a volume analysis standpoint, that's good to see. And you also have the MACD still above its red line. You don't want to see it cross below it. So if it starts to round off here and then heads back up, that would be a nice little secondary confirmation sign there. But for the time being, it's more a question of what's the price going to do now that it has bounced off the 20-day and put in a nice little candle here. If there are any other questions though on the chart, please shoot me a message. I'd also note to please check out bullmarketnewsletter.net. If you go there and sign up for the free newsletter, you'll be sent a free ebook which gives tips and tricks on how to use charts to profit in the market. And with your subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from penny stocks up to big boards. So there's a good variety, something for everybody. And best part is it's all free. We've been making some good money together, so it's definitely worth at least checking out. One last time, this was HESG. Thanks for listening.